Okay, I believe we are live. Wonderful. So I'm just outside, staying here in Kelowna, and you can probably see the background here. Beautiful view. I don't know if you can tell or not, but water is crystal glass, you might say. So I'm going to get out here and probably actually right after this Facebook Live, I'm going to go water skiing. But today I thought I would tell you, or we would go into the capital raising question, which I get quite often from new investors. And I think one of the biggest reasons I get questions as it relates to how to start investing in commercial real estate is there's kind of two fundamental questions, and that is, number one, I don't have money or enough money, and number two, where do I find the deals? So I would say we've probably spent the last, 10 or 12 episodes talking about how to find the deals, and I thought today what I would do is I'd start to talk a little bit about, a little bit about how to raise the capital, because that is one of the things that I'm probably for me, that's my skill, finding deals and raising capital. And I think when we get into today's session, you're going to see how close the two are linked together. And this really started with a conversation I had with a gentleman, Ian, not long ago. And he asked the question. He's like, Shane, look, I'm wanting to get into commercial real estate. I've been doing a lot of residential, but I just don't have the either passion or time to want to continue to do these small deals. But he's like, I don't have enough money to invest in a commercial project. He's like, can you show me how to do that? And I said, yes, absolutely. And he has some good connections with some people that have money, and they know he's in real estate. They know he's invested in real estate, I should say, but they don't see him as a commercial real estate investor because he's never done that. And today, I guess really the big idea that I want you to take away is this. And I don't know who said it, but the concept is you don't wait to until you need water to dig a well. And what I mean by that is, I don't want you to wait to start raising money until you need it. And it may seem somewhat counterintuitive, because when you're talking to successful people, the idea is that you want to be able to show them something. And I completely understand that. The challenge is the window, once you find a deal and you start to start your due diligence and writing offers and it's under contract. If you wait until then to start building the list of investors and it's the first time they've ever heard from you, the challenge is your need is extremely high, and investors, they don't like that. Especially wealthy individuals, they want to feel like it's exclusive. They want to feel that you don't need them. And while that is difficult, I will admit, especially when you're first starting out and you don't have a kind of a bench of investors, I think that one of the best ways to get around that is to start having conversations early where people know what you're doing, and we'll get into how to have those conversations. So I'll kind of give you a quick example. When I launched my podcast, I officially launched it, I want to say just at the end of June in 2019. And I didn't wake up and just say, you know what, today I'm going to send out text messages and emails to a bunch of my friends and ask them to support me in launching this podcast. I had spent 6 months doing Facebook Lives like this. Prior to that, I had written a book and I had published, I think it was about 75 posts on Facebook that started to build a community and people around me where I was delivering and adding value. And so I invested upfront probably in excess of 1,500 to 2,000 hours, so that when I went out and asked, and I had a very specific game plan that I rolled out, but when I went out and asked people to support me, they were very happy to. And it's likely why I was able to push my the Investing Advantage podcast up to number 2 or number 3 in Canada. And I think even in the US it hit the top 5. It was like, I've got screenshots where I'm next to like Dave Ramsey and Tim Ferriss, and while I get that I'm not going to stay there forever, it was part of the promotion. It was still good traction for me. And the parallel is, I didn't wake up and say, today I'm going to send out 250 or 300 text messages to people and ask them to support me if it's the first time they've heard from me. And so if you're doing the same in commercial real estate, where if it's the first time they're hearing from you and you're saying, hey, I need $150,000 to invest in this project, it's in my opinion, I think that there's a better way to do it. So what I'm going to go through are kind of 3 critical steps, and we'll take a step back so that I can frame this properly and you understand it. So the idea is, you want to start investing in commercial real estate. But the question is, okay, well, how do I start having those conversations with high net worth individuals, people that have money, if I don't have a project to show them? And I think that number 1, I'm kind of skipping ahead a little bit here, is you want to start practicing and having conversations with investors early. And really, I feel that it comes down to creating a list of investors, individuals that have money. These could be doctors, these could be lawyers, accountants, business owners, people that know you. I feel when I watch people that are trying to raise money on webinars and going out to people they've never met, and or renting lists and trying to buy names of people that they have never met, I just find that it can be done. I'm not saying it can't be done. It just, in my experience, it's a way harder path, because A, they don't know you, so they can't like you, and they certainly don't trust you. And so at a bare minimum, starting with people that you know, like, and hopefully trust you. They may not trust you investing in commercial real estate, but at least you've got their trust in other aspects of life. That is a great place to start. And what happens is, I kind of think about it, investing or raising money in concentric circles. So I start with people closest to me, and then I start to go out and out and out. But at a bare minimum, if I start with someone, maybe they don't have money here, but they know someone, and I can get that warm introduction. And with that warm introduction, now all of a sudden, if I know 200 people and they each know 200 people and they introduce me, it's like LinkedIn. I mean, if you see who your second and third connections are, I mean, I might have 1,500 people who are on my first connections, but my second connections, I think I'm probably close to, I don't even know, probably 30 or 40,000. And so that is kind of an interesting way, in my opinion, to start thinking about how to start building that list of people. And there's one other reason that I believe it's so important to start having conversations early, and that is, you're not going to know what investors want. It's quite interesting where you could have what you would think, say 10 potential investors. Let's just assume they're all doctors, or maybe they're all business owners. They, depending on their age, depending on where they live, depending on how much money they have, depending on the types of deals they've been in the past, they could all have very different ideas or outcomes or goals that they're looking to achieve while investing. And so why is that important? It's important because if the first time you go out and pitch someone a deal and you talk to a doctor and he says, well, I'm looking for a 10% return minimum, I don't want to be in a small town, I need, and you think, okay, all investors must want that. It's just not the truth. And what you'll eventually start to do is have buckets of investors, where these guys like this types of projects, some like these types of projects. You're going to know how to communicate differently because they have different hot buttons, but that just comes with time and experience. And the only way to get that time and experience is to get the reps. And to get the reps is starting early and having those types of conversations. So that in my opinion, is really why starting early and practicing, if you will, not wasting people's time. I'm certainly not an advocate of that, because you will quickly burn out prospective investors. But I think probably now is probably a good idea to just really transition into kind of the three strategies. So we've already touched on this, but number one is I like to create a list of people that have money or know people that have money. And accountants is a great accountants and relationships with accountants, I believe, is a great way to start, because if you can afford an accountant, or a lawyer for that matter, generally you're in business, you have money, or a professional corp, or some sort of you're making enough money to justify investing in an accountant. I think that is a good place to start. Just understand that accountants are not going to refer their clients to you without any type of a track record. But once again, starting those conversations, being around, like if you watch what accountants do or lawyers do or professional services, they put themselves in situations that they're going to be around people that have money. And that's kind of a mindset or a philosophy that I think would that has helped me, and I continue to think about how do I get in front of those types of people. I mean, because I have an accountant myself, my accountants invest in my deals, and when they do well, they start to tell other people. And so it doesn't take long when you really get into this business, and if you take the long-term approach, which is what I'm a huge advocate of, you can see how once you do one deal and it works out well, you'll be amazed at how many new opportunities open up. So it's kind of hard to see outside right now because the sun is right behind me, but I had to be outside because everyone's still sleeping. So we will continue. I guess probably the next question will be, well, what do I say to these prospective investors? And I guess the easiest way is you want something that's going to be short and concise with respect to, some people call it an elevator pitch. I don't want you to overthink it. You don't want to sound too scripted. However, you do want to think about what it is that you want to say to people, because you don't want to fumble around and either try to sound too smart or try to sell someone on what you're doing. That's not the point. The purpose of the elevator pitch is essentially to get someone interested and curious in what you're doing enough so that you can have a second conversation with them. And so I just jotted down a few different things that a person could say. Don't take this, you may want to tweak it, but you could say, you meet someone for the first time and you might say, look, I'm an apartment investor. I find underperforming retail properties in markets that are 100,000 people to 1 million people. Or I find, you may want to talk about a geographic location. You may want to talk about the asset class. You may want to talk about, here's one. I find I find off-market apartments usually between 50 and 150 units to fix up and add value to in Houston. I've got a small stable of investors that I work with and that are looking to create predictable income. Something along those lines. Like that may even be too much, but I'm just trying to give you some ideas in terms of what to say. Really, the whole goal is for them to say, well, what do you mean by that? And what is, like, and then you start a conversation, and then you can get into the types of properties that you actually are investing in or finding. The last piece of the puzzle is that I hear quite often is, Shane, I don't have experience. If it's my first deal, how do I get started? And I would tell you that it's the same way I've started. It's the same way that if you go to any highly performing, I shouldn't say any, most highly performing individuals, investors specifically, whether it's in equities or commercial real estate, they generally have a team, and if they started off from scratch, they found a mentor to help them get to where they wanted to go. And that usually means that they give up a big piece up front, because they know that in the long run, they're going to be the ones that get the lion's share of the deal. But when you're starting out and you don't know what the hell you're doing, then it's my suggestion that to get a small piece of a big pie is better than to get zero piece of nothing. It doesn't matter how big the pie is, because if you're not in the game, then it's essentially you're just spinning your wheels. And so I think that that's probably one of the biggest attributes that I think the word is mentees, the people that train underneath me in terms of how to find and invest in commercial real estate and how to raise capital. They are able to leverage me if they bring me the right deals in the right locations. They get access to my team, and that team includes brokers, accountants, lawyers, due diligence, the guys that actually manage and execute on my deals. I actually raise money for those deals, and so they get to see everything from start to finish because they're part of my team now. And so I'm not saying that you need to work with me in order to get that, but what I would suggest is that you find someone that will do the same for you. But understand they're not going to do that for free, and they're going to want, especially if they're putting their reputation on the line, or they are putting up the majority of the money, they're going to want to control the deal, and they're going to want the majority of the upside. And it may seem unfair because you went out and found the opportunity, and maybe it is unfair, I don't know. So you have to kind of determine what you're prepared to give up. But this is a very, I'll call it like a big boys game, where when you're dealing with, tens or millions to tens of millions to hundreds of millions of dollars, the people with the cash, they will make the rules. And eventually, when you know how to structure deals, when you understand that, when you put the right team in place and you've got a little bit more experience, then you will start to dictate the rules of the game, if you will. But when you're first starting out, having that kind of dream team around you that can really add credibility to what it is that you're doing, in my opinion, is probably one of the key pieces that most new investors either miss or underestimate in terms of their value. So, I was going to tell you guys, maybe I'll do a quick story on this. So when I'm going into Dallas and Houston right now looking at properties, and one of the first things that I did is I aligned myself with locals that could help me and essentially give me the tap on the shoulder first when there was either an off-market deal or a great opportunity. And secondly, the reason I wanted that was because A, I don't want to make a mistake. B, I want to have access to deals first, because what you'll find is that is really, I can't harp on this enough. When you find the right opportunities, finding the money is very easy. And when you can tell an investor, this deal is off market, no one else has seen it, here's the reasons why it's so tremendous, why we have to act on it quick, and you're able to kind of rattle that off. Investors, guys with money, understand how difficult it is to find a great deal. And so when you're buying and flipping homes, I'm not going to say that there's still difficulty in that too. However, in commercial real estate, when the upside can be in the millions, then you know that the competition is going to be even more like you're just dealing with a very elite class of people. And so people with money understand that, and they know that they got to act fast. So but I guess one of the reasons that I'm able to go into a new market and have these people accept my phone calls is because I'll either get warm introductions. I use LinkedIn quite a bit. I'll tell you kind of an anecdotal, I'll tell you how I used LinkedIn when I first started and how tremendous it was in a second. But the other thing is the lenders, the brokers, the lawyers, these guys have all made money working with me in the past. So A, they take my calls. B, they show me deals first, and they take me serious. And without a track record, that's harder to do. Hence why finding someone that has that track record that you can piggyback off of is, in my opinion, just a really good way to get started. So just quickly on LinkedIn, because I did mention it, one of the first deals that I found in Houston was from I used to do a lot of prospecting on LinkedIn, where I would get kind of a warm introduction, and then I would generally pick up the phone and say, hey, I'm looking for properties here. So I connected with a guy, his name happened to be Ian, in Austin, telling him I was looking for apartment buildings. This was in, I want to say, 08, 09. And he got back to me, said, well, I don't have anything here locally, but what I would say is talk to this lady Teresa in Houston. Well, Teresa, we ended up doing, I think it was either 19.8 or 20 million. I can't remember if the deal got retraded at the very end. It was a little while ago. And the reason, you might think $200,000 is a lot of money, and it is, but we sold the property for 33 and a half about 5 years later. So anyways, that is from one connection that I made on LinkedIn. And so the power of building that network early, and I didn't just pick up the phone and we did a deal like this. Obviously, I picked up the phone, we had a conversation, had a few more conversations. I flew down to Houston, I met, we toured some properties, put it under contract, and da-da-da-da. But that introduction was made through LinkedIn, and it was a second connection because I knew what I was going after, and I was able to communicate that well enough that they took me seriously. And you have to remember, I had never done a deal in Houston. I had no track record in Houston, and or the U.S. for that matter. But you know, if you find the right people, it can be extremely beneficial. So I got to wrap this up because it looks like my battery's going to die. And okay, we talked about that. So the recap, really quick. The big idea: start early when you're fundraising. Create that list of people that you want to talk to. Know what you're going to say to them. Have it planned and scripted out early. And then number 3 is just partner and build the right team around you. I think that is going to be extremely valuable. If you'd like and you want to get a copy of my book, Club Syndication, where I go much deeper into how to raise money and capital to invest in commercial real estate, you can go to clubsyndication.com, or you can go to shanemelanson.com, and you can go there. I think there's a link. You can go get my book. Right now it's free plus shipping, so basically it's less than $7. I think I break even in Canada. I lose a little bit of money when I ship it to the US. But once again, I'm doing this to build a long-term relationship. So because if I meet one right person and I start to do deals with them down in the US or a market that I want to be in, it can be extremely lucrative. So that's it for today. Hope you enjoyed it. Any questions, by all means, you can flip me an email, and we'll see you next week. Bye for now.